All right, welcome back to another episode of the Black Bullion Show. So we need a little bit of good news in gold, guys. I think what I will be sharing with you guys today may do just the trick. You know, the DXY has been fighting against its downward trajectory as of late, and it seems as if it's putting up a pretty good fight. But this Friday, we are poised to get some news that may give a boost to gold prices. But what is it, you ask? Well, find out shortly. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Okay, so we have a new one here from Kitco entitled Look Past Jobs Report and Focus on Friday CPI, Commerce Bank. All right, so let's get into it. Markets continue to digest the latest better than expected employment data. However, one international bank recommends that gold investors pay more attention to impending inflation data. Commodity analysts at Commerce Bank said that Friday's non-farm payrolls data, which saw the unemployment rate drop to 8.4%, could weigh on gold in the near term. Still, they added that inflation data, which comes out at the end of the week, will provide long-term momentum for the precious metal. The analysts noted that the unemployment rate at 8.4% is still more than double what it was before the Ronies happened. Furthermore, the Fed had recently stressed that it will not automatically raise interest rates in response to a low unemployment rate, but only if this came in conjunction with growing inflationary pressure, they said. Thus, the labor market data will do little to change the Fed's monetary policy, especially as the increase in the number of jobs created has slowed for the second consecutive month, and not even half of the massive number of jobs lost in March and April have been recovered. Looking at inflation, Commerce Bank said that they will be interested to see if July's rise continued into August. The July data had been surprisingly high. If this were to happen again, inflation expectations could also rise further, pushing real interest rates even deeper into negative territory, they said. So guys, if we get that boost in inflation, we may head back down in real yields. I mean, check this out. So here we have the 10-year Treasury yield when you factor in inflation. Take a look at August 6th. I'm just going to point it here. August 6th was the last time that we had a new high in gold. And we also had a real yield of negative 1.08%. But we recently had a similar yield last Monday on August 31st of negative 1.08%. Remember, that's also when we were last approaching $2,000 an ounce during the early morning trading hours from going into September 1st. Now, I think with all of the positive economic data that we've been getting, though I do raise my eyebrow at a lot of it, I would be surprised to not see rising inflation accompany it. But what do you guys think about all of this? Will we have lower real yields by Friday? Let me know in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion.